Hey guys, welcome back to Stacking Stocks as we talk about Tesla stock in 2022. In the last year, Tesla has been exceptional in terms of deliveries, partnerships, and production. From buying $1.5 billion of Bitcoin to the partnership with Hertz, which made the company hit the $1 trillion market cap, to navigating supply chain disruptions better than many of its peers, thus enabling strong deliveries. The auto manufacturer certainly dominated headlines in 2021, with CEO Elon Musk selling billions of Tesla shares. So the question is, how will the electric vehicle making giant fare in 2022? There are analysts who believe that 2022 is set to be another favorable year for Tesla, with the EV company stock potentially rallying close to 30%, partly because of an increase in demand from the Chinese market. Daniel Ives of Wedbush Securities states that the stage is now set for EVs to take a significant step forward in driving customer adoption in this green tidal wave. Electric vehicles don't have internal combustion engines and instead are propelled by a rechargeable electric battery or, in some cases, more than one battery. Drivers can recharge them by plugging them in at home or stopping at public charging stations. That explains why many consumers are willing to jump on the EV train. Ives acknowledges that Tesla has succeeded in navigating the chip supply shortages better than any automaker globally over the last 6 months, which is why Tesla is in a clear position of strength heading into 2022 with an inflection point year ahead. He added that there are three main catalysts for Tesla in 2022 that, if successful, will be a major driver of the stock moving higher, with Wedbush's current base case price target at $1,400 and bull case at $1,800. Wedbush maintained its outperform rating. China is a key variable in the Tesla bull thesis, which Ives estimates will represent 40% of deliveries for the EV maker in 2022. While the chip shortage remains a headwind for Tesla and every other automaker, Ives said that this is a transitory issue. He estimates that China's story is worth $400 per share to the Tesla story for 2022. Ives further notes that the second driver for Tesla's performance in 2022 is the opening of new gigafactories in Berlin and Austin, which will alleviate those bottlenecks of production for Tesla globally. Wedbush estimated that by the end of 2022, Tesla will have the capacity for approximately 2 million units annually from roughly 1 million currently. While supply chain issues have been a problem for overall unit growth for Tesla in 2021, Wedbush noted that over the coming year, this dynamic will significantly moderate, with potentially 1.4 million to 1.5 million units now within reach annually for 2022. While China will be a key growth driver, Ives believes demand is building for Tesla's Model Y in the US and Europe, with 2022 likely another breakout year for Tesla and the EV industry. On December 28, 2021, Musk sold an additional $1 billion worth of Tesla shares, according to Securities and Exchange filings. Musk has sold billions in Tesla stock since his Twitter poll in November 2021, in which he asked his followers whether he should sell 10% of his Tesla shares. Musk has a looming tax bill of more than $15 billion. He was awarded options in 2012 as part of a compensation plan, and because he doesn't take a salary or cash bonus, his wealth comes from stock awards and the gains in Tesla's share price. The options are set to expire in August this year. In order to exercise them, he has to pay income tax on the gain, so it's nothing to do with Tesla's performance. Yes, the sale at first affected Tesla's stock price in the market, but that has since been reversed, with the company posting outstanding delivery numbers for December 2021 and the entire year generally. Tesla has gotten most of its supply chain issues under control faster than most of its competition. Even though Tesla's share price has bounced around a bit this year, Tesla has a clear shot at reaching greater heights this year. Well, that's at least what most analysts and investors expect in 2022. Deutsche Bank's Emmanuel Rosner notes that we'll continue to see a large upside to 2022 consensus expectations, battery technology, capacity, and especially cost will continue to accelerate the world's shift to electric vehicles and extend Tesla's lead considerably. It should also enable Tesla to keep expanding its operating margins, likely exceeding 20% over the next few years, representing very best-in-class performance. Despite starting the year off on a high note due to impressive delivery statistics, Tesla stock has risen and fallen on almost a daily basis since then. No doubt there's been some pessimism among investors regarding the growth potential of the electric vehicle sector. But that doesn't mean that Tesla will perform dismally throughout the year. We've already seen some notable analysts staying bullish on the stock. Goldman Sachs analyst Mark Delaney issued a bullish take on the stock, increasing his 12-month price target to $1,200 while maintaining a buy rating. As he sees it, Tesla is the best positioned company to help lead the transition to EVs. Delaney cited the company's higher than expected deliveries for the fourth quarter of 2021 as a primary reason behind this mindset. The analyst also notes that a lot of people expect Tesla to expand margins in the intermediate term as it ramps the important Model Y product, as well as new factories in Berlin, Germany, and Austin, Texas, and in the long term as it increases its mix of software revenue. Goldman Sachs isn't the only bank to be raising its Tesla stock price predictions, as we've already seen. Morgan Stanley analyst Adam Jonas also raised his price target to $1,300 while maintaining a buy rating. Jonas also feels that the fourth quarter deliveries will lead to Tesla stock powering higher in 2022. The analyst says the EV race might be more accurately described as a marathon, too. Tesla's in the lead at mile number 21, whereas everybody else is at mile 2, or really still tying their shoes. According to Jonas, recent record deliveries of its cars were proof that Tesla's position will become stronger as the marathon progresses. He revised his price target for the automaker's shares to $1,300 from $1,200 and predicted delivery figures of 2 million for 2022. Tesla delivered 936,000 vehicles last year and plans to increase that figure by 50% this year. Now, as you can see, every analyst seems to think that Tesla is way ahead of its peers in the EV race. Truth be told, we also don't see any automaking company catching up anytime soon. For most firms, they're still held back by their fuel-driven vehicles, which are still flooding the auto market. But Tesla doesn't have anything holding them back. They've been purely electric since their inception, and that's what makes the difference. Like Jonas, Delaney also cited Tesla's leadership position in electric vehicles, adding that global electric vehicle adoption trends could act as a tailwind for the company's sales. However, Delaney also notes that the caveat to this bullish assessment is that adoption rates may not pan out as expected. A slowdown has the potential to curtail Tesla's lead and allow competitors, of which there are many, to catch up with the company's tech and infrastructure. Now, the enthusiasm of analysts for Tesla stock is centered around the company's operational expertise. During the pandemic, when established car manufacturers struggled with chip shortages and supply chain bottlenecks, Tesla pivoted between suppliers by rewriting its software to keep its factories humming. It also opened 2 new manufacturing facilities in Austin and Berlin to augment production. These facilities will bolster Tesla's bases in Shanghai and Fremont, California. Collectively, the developments mean increased operational margins and scale to manufacture its vehicles. Not to mention the vehicles Tesla has lined up for launches and deliveries this year. There's just a lot in the pipeline for the EV-making behemoth. Well, nobody can argue with facts and figures. So as it stands, we believe that Tesla has so much to offer in 2022. The analysts have said it, we can see the strides Tesla has made. So what will be the curtailing factors? Nothing that we know of yet. Thanks for joining us today. Just hit the notification bell for updates in case we get anything essential to share. Remember to like, share, and subscribe. Stay safe and see you next time. Ciao.